Hey everyone, I'm Rocky Batani from Private Lender Link. We're at California Mortgage Association Summer Seminar in San Diego. I'm here with Nima Dagbandan from Jurasi Law Firm, and they're one of the premier law firms in the private lending industry. And so today we're going to talk about loan docs and loan doc automation. So Nima, first of all, why don't you tell the audience who you are and what your role is in our industry?
I appreciate that, Rocky. So Jurasi LLP is a vertically integrated law firm, and what that means is that we are a one-stop legal solution for those that are involved in the private lending industry. We have a corporate and securities practice, which does fund formations and licensing and other corporate formalities for mortgage companies. I'm part of the banking and finance team. We prepare loan documents on a nationwide basis, as well as provide compliance advice and research advice based for mortgage lenders throughout the country, as well as having a fully automated loan document product called Lightning Docs, which lets people originate loan documents nationwide through that automated online solution. And then we also have a litigation and bankruptcy practice, which is the necessary fallout from our space. But the theory is basically one client can come into one place and be able to get all of their legal needs solved.
So in terms of loan docs specifically, as this market's changing so much, all of the lenders nationally, or a lot of the lenders nationally, are looking at other products to offer. So they're moving away from only fix and flip, and maybe they're getting into long-term rental, or they're doing construction. And what are some of the challenges that they face as it relates to loan docs and the whole legal aspect of closing these loans?
Yeah, and we've talked about this before, which is that the interesting that's happening right now is that even though there are what appears to be fewer transactions occurring, what you're really seeing is that there's such a unique capital opportunity. I mean, there's capital providers that really are willing to provide you the ability to generate loan products that you probably otherwise wouldn't have been able to do before with your own investor base or your own line of credit or banking relationships. And so right now is you're effectively able to generate and create lots of different loan products. And you talked about, right, so a 30-year rental or a fix and flip or a ground up or whatever it is, whatever you were doing, you can now do more. But the challenge is you've built your business and your infrastructure and your apparatus all around the thing you already knew how to do. Loan docs is one component of that. And so for us, as a law firm, we're writing loan documents one day for a commercial real estate client that's going to do a $10 million deal, and the very next moment we're doing a $100,000 SFR in Tennessee, right? So that's the diversity we have to practice within. All of that requires us to be cutting edge in terms of using document automation for us to practice as a law firm. The byproduct of that is that exact same development can be used for our clients, and that's what Lightning Docs is. It's just the byproduct of our legal practices, so it's the exact same automation. So if you were an attorney at my law firm, you would go on the software and you would enter the exact same interview that our attorneys are entering into and getting the exact same loan documents we get out, because it's all of our legal coding that has been applied to it, to the facts of your loan. So it's a property in Tennessee for this dollar amount and this type of loan amortization, or does it have construction, or does it need these components to get an effective set of documents? But it's doing all the legal logic in the background. You're not doing anything except for inserting the terms of your loan transaction, and through doing that, it generates the documents. So from our perspective, it's one of the pain points, it's one of the fears or barriers you may have. It's trying to get rid of that and saying, look, you may not have ever generated a long-term rental loan prior to this, but you probably have the underwriting and the bandwidth and the deal flow to get it done. Now you can also get the documents to flow with it, and you have the peace of mind knowing that you don't need to understand Tennessee's laws and Oklahoma's laws and all these random places where you could theoretically generate. It's going to handle all of that for you, so you have peace of mind that you can actually do this safely.
But isn't it from a lender's perspective that, hey, I just need the set of loan docs and I'll figure it out myself per each loan?
Yeah, it's an interesting misconception that I think people oftentimes have, which they think of, I still get the ask this all the time, hey, can I buy a template from you? And I'm like, sure. What template would you like to buy? Right? Because that deal, that $10 million CRE deal, and that rental deal, and even within the rental deal, is it Rocky borrowing individually? Is it private lender link and then being personally guaranteed by Rocky? Does Rocky have business partners? Right? All of those nuances in your fact pattern change how I should write the loan documents and how I would write them.
So it's not one template. There's all these different clauses that have to be entered per state 100%. And per scenario and per entity type,
yes,
et cetera, et cetera.
That's exactly right. It's our attorney. When you tell me or any other attorney a fact pattern, what we are doing is legal analysis in the background going, because of the facts you've told me, I now need to write this document this way. But in a loan transaction, that's repeatable because the fact that you have two guarantors or one guarantor, the property is in this state, those facts can be put together and you can say is if this happens, then this happens. If this happens, then this happens. And you literally code that into the documents. So you're repeating this process. And the nice thing is it's always the same thing end result. So when you're reading them, they look consistent to you as well because you're applying the same logic over and over again. It's not novel language being written each time.
Sure, makes sense. So instead of a lender trying to figure out, oh, how do I manipulate this template and program it to where it comes up with the same docs, they could just use your Lightning doc system.
And that's what's happening, right? Is so many of our clients have built their business models and they've done exactly what you just did. Is they put a bunch of templates and they've got their, their Salesforce or whatever systems they've built and they've spent a lot of time and now they want to get into a new product or a new state or whatever, and they're like, oh gosh, like I have to do all of this build out all over again. And it's really a solution that says, look, continue with your core line of work and produce it how you produce your core line of work. But don't say no to opportunities because you're now worried about the cost that's going to be associated with doing it, because the cost is now down, right? You can actually go and start venturing into these new opportunities and have a way to do it economically.
And so in terms of the cost, it's not like an attorney is involved in every transaction. You're providing the platform and the lenders can use it very easily and spit out their docs as needed.
And so it's the system that we use, right? So if you're an attorney or a loan processor or anyone at our law firm, it's the exact same process, which is tell me about the transaction. Who's the borrower? What's the property address? Where is it at? All the things you would expect to find in an interview, right? And then when you are done completing this interview process, there's just a download button and that's your documents, right? I mean, that's the world in which we live in. And from someone who's been practicing this for my entire legal career, it's not the world in which I started in, right? I mean, it was all manual, it was merge fields, it was all this, really crazy wild west way of trying to prepare documents. But for us as a law firm to be able to scale nationwide and to have a bunch of different product types, we are solving our law firm's problem, not really thinking about the fact that this was also solving our clients' problems because they had the same issues and they currently have the same issues that we do. It just provides them an ability to harness our hard work and our maintenance of these libraries and these templates. It gives them the same ability without having to do it themselves. So I always tell people, like, I'm getting you out of the document management business. That's what I'm doing. Because you hate that. You know what you're really good at? You're good at originating deal flow, working with your capital relationships. You're good at what you're good at. And I guarantee you is none of you want to really be in the document management business because I'm in the document management business and it's great for a law firm and terrible for a loan originator.
Yeah, makes sense. And so in terms of how the fee is structured, I'm sure some people out there think, because it's built by an attorney or by a law firm, it's still going to be really expensive. And is it really economical where they could just pay a per loan fee or a monthly fee just to have access to the system and they do everything themselves?
Yeah, and so when we developed this, we talked about this earlier, is we developed it for our internal use. The byproduct of this was the ability that our clients could actually generate the documents themselves as well. And so what we started to see in the marketplace was that oftentimes a client would say, look, for these larger loan transactions, there's no argument about putting attorney's fees involved with this, and their peace of mind of having a law firm be all throughout the transaction was worth it. But what happened, particularly with these rental loan products, is that your average rental loan is somewhere between $100,000 to $300,000 nationally. No law firm is going to be competitive to really generate that sort of loan product, right? Unless there's some great, crazy volume play available. So oftentimes, even though you may want an attorney involved, it is economically unfeasible to do so. There's just not enough margin in the transaction to put a law firm involved in there. And so what you have to figure out is the solution for this is really, this gives you the ability to get the documents that a law firm would have drafted, right? Not some template, but a real set of well-written documents. But because I don't have to have an attorney sitting and lying in wait doing this thing, it is effectively this is happening outside of my purview, right? People are completing them, they're finishing these interviews, and they're downloading the documents. And so we've been able to create, really enticing economic models. And for most people, it's, somewhere between about $200 to $500 per loan. Okay. And based on the volume that they do, right? And so it gives them an ability, and there's not like this, huge subscription cost or, this is a legal solution, and the goal is to be an additional support. At the end of the day, our goal is to help our clients transact.
Sure.
right? And that's what the emphasis of this product has been.
Okay, I like it. And this is available in all 50 states?
Available in all 50 states. It'll produce the state mandated disclosures. I mean, and it's really tightly written. I mean, it's funny because people, oftentimes what happens is people will already be in these states and they'll get in fights with me and they'll say, hey, like I'm in Arizona, why are you making like the guarantor's spouse sign this guarantee all of a sudden? That's crazy. Like what's wrong with you people? And I was like, did you know that Arizona has unique community property laws that actually requires this if you want to bind their community property? Like that's why it's there. I'm not doing this to be weird. Right? And so it actually exposes holes and flaws in people's business models. Right? I mean, and so it works in all 50 states, and it's better, it's better than whatever you're doing in all 50 states anyways, because it's got the coding logic to say is, tell me about the facts, because in that situation, right, it knows that the guarantor was an individual, and that individual spouses have to be on that guarantee. Right, that's an if-then coding logic situation that just happened, and so it's not only writing it for all 50 states, it's writing it to your transaction in that state, and that's what makes it different.
Okay, I like it. Great. Well, thank you for that overview. And so, if anyone needs a automated doc solution, check out Lightning Docs. Reach out to Nima if you have any questions about transactions or anywhere in the country, or the Lightning Doc system, and Nima will take care of you.
Thanks, Rocky.
All right.
I appreciate
Okay.
it.
Thanks for coming by.
Thank you.